Hey everybody, in this video I'm going to be talking about an important concept. It's the difference between whether you're going to be classified as a business or whether you're going to be classified as a hobby if you're engaged in an activity. This is extremely important because it's going to impact how you're going to be taxed, whether you're going to be able to deduct expenses, whether you're going to be able to deduct losses, whether you're going to be able to claim the qualified business income deduction. Right? So we're going to go through in this video and I'm going to talk about the tax implications of this important decision, and then I'm going to go ahead and I'm going to show you the factors that the IRS considers when they're trying to determine whether you're going to be a business or a hobby. Now, there's a lot of information out there that is not correct, so this should help set the record straight on what it is and what it isn't. So let's go ahead and let's look at how it's going to be impacting you in terms of taxes. All right, so here's our table, everyone. So you can see this is comparing business versus hobby. And we start out with a tax form. Where are we reporting this information? So if you're a business, you're going to be using the Schedule C. But if you're going to be a hobby, if you end up being classified as a hobby, you have to use the Schedule 1. It's going to be considered other income. Then the next thing is, do we get to deduct expenses? Well, if we're a business, yeah, we do if they're ordinary and necessary business expenses. Now, I've done videos on ordinary and necessary business expenses. As a matter of fact, there's a short that deals with the Cynthia Hess case. It's better known as the Chesty Love case. And in that case, what we saw was that a dancer was able to go ahead and deduct the cost of her breast augmentations in order to enhance her business. And we found that that was considered an ordinary necessary business expense by the courts. So ordinary, necessary, helpful business expenses that are going to be necessary. So hobbies, they do not get to deduct any of their expenses. Okay, we don't get to deduct the different expenses with the hobby. What about if we have losses? What if we weren't profitable during the year? Well, if we're considered a business, we get to deduct those losses. Okay, but now there are some limitations with it. The at-risk limitations, passive activity loss limitations, and excess business losses. So I have a video that deals with the passive activity losses and the at-risk rules. So go ahead and check that out. It's one of my full videos. But if you're a hobby, you're not going to be able to deduct any losses. You won't have a net operating loss that you're going to be able to deal with. Can you carry forward your losses? And the answer is yes. You're going to have a net operating loss carry forward, and we're going to be able to carry that forward to next year and the year after that and the year after that until we use up all of that loss. So if we're a business, we do get to carry it forward. And of course, if we're a hobby, because we don't get losses in the current year, we're not going to be able to carry anything forward because it's zero. So it's not applicable as we look at the hobby. Self-employment taxes. Okay, if you're a business, yes, you're going to have to pay self-employment taxes. And you're going to do that on your net earnings. So you're going to see it on the Schedule SC. If you're a hobby, you don't have to worry about self-employment taxes. It's not going to be a thing that you have to deal with. And then finally, do you get that QBI deduction? And I have a detailed video that talks about QBI deductions and how you actually calculate it, depending on what your income is, where you fall within the threshold. So check that video out. But yes, if you're a business, you could qualify for the QBI deduction, which is 20% of qualified business income or 20% taxable income. So you're going to be looking at that. If you're a hobby, no, you aren't going to get the QBI deduction. So you can see there's a lot writing on this for us, whether we're going to be classified as a business or a hobby. So the next thing we need to do is we need to go through and we need to determine, or at least look at what the IRS uses to determine whether we should be classified as a business or a hobby. So let's go ahead and do that right now. So here's the factors that the IRS uses, and I took this off of the IRS website as far as the IRS factors, and then I went ahead and I created the rest of the table. But this will give you an idea of what the IRS is using this year in order to make this determination, and the factors stay pretty consistent throughout. But here are their specific factors that they listed. The first one, is there an intent to make a profit? So if there's an intent to make a profit, then that shows it's going to be a business. If it is just for personal enjoyment, then that's going to be more of a hobby. So we go to the hobby aspect of it. The second one, if the activity makes a profit, how much is it? So here's the thing with that. If your activity has made a profit in 3 of the last 5 years, then you're going to be considered a business. Okay, there's a presumption that you're considered a business anyways. Now, if it hasn't, if you have small, occasional, incidental type of profits, that's going to be considered a hobby. But if you've been profitable 3 out of the last 5 years, then the IRS is going to presume that you're going to be a business, and that's how you're going to be treated. So those first 2 factors are by far the most important factors, and what it really boils down to a lot of the times is it's the profit motive. Do you have the profit motive, or is this something you do just on the side that you just enjoy doing? Okay, the third one. Can they expect to make a future profit from the appreciation of assets used in the activity? If so, then yeah, that looks more like a business. If not, it looks more like a hobby. Now, not all businesses are going to have a bunch of assets like that are going to be appreciating in value. So one thing that's important to look at when you're looking at the factors that the IRS is using is it's not just a scorecard. It's not like, okay, I have 3 that are in favor of business and 5 that are in favor of a hobby, so now I've got to be a hobby. No, because they're not all weighted the same, and this is done on a case-by-case scenario. So based on the business model that you're using, the business activity that you're engaged in. And like I said, so the first 2 factors are also more heavily weighted. It's generally more heavily weighted. So let's look at another one. Do they depend on income from the activity for their livelihood? Well, if that's what you're really focused on, then that's going to be more of a business. But if you have another job and you're just doing this, making a little bit of money, and looks like it could be a hobby, right? Not necessarily always, because when you start out a new business, it's not going to be making a lot of profit. It takes some time to actually start to make that profit. So you may not be relying on it, but your hope may be to eventually quit your day job and to start this activity and grow it into something that you're going to be doing permanently all the time. Are there any losses due to circumstances beyond their control or normal for a startup? So when you start looking at the different losses that are out there, what we're looking at is, are those losses normal, right? Are they normal startup losses? So whenever we start a business for the first 4 to 5 years, we can almost expect to have losses in those initial years. We have a lot of expenses. We have to be able to grow our clientele or our customer base. So it takes us some time. So the IRS recognizes that, and they're going to say, oh yeah, this is pretty normal for a startup business. Or maybe there's a hurricane or a flood or some kind of unfortunate event that happens within your community, and that you are not able to, it's outside of your control. You're not able to control it, right? The IRS takes that into consideration as well when they're looking at the losses, saying, okay, yeah, it's a large amount of losses, but it makes sense. But anyways, if those make sense, then yeah, that's going to be more of a business activity. If it doesn't make sense, it's going to be more of a hobby. Are you trying to make operational adjustments in order to improve your profitability? So you're noticing the same. It's all about profitability in here, right? It's about profitability. It's why profit motive is so important. So do you look at your analytics? Do you say, hey, what if I change marketing strategies, right? So in one of my shorts, I talked about a company that offered free beer to its customers. So while their tanks being filled up, you could come in and you could drink some free beer right on the premises, and then after you're done with your beer, you can then head out. All right, probably doesn't work real well today. A lot of other types of regulations and things that are out there, but I do have a case on that. It's in one of the shorts, so you can take a look at that if you're interested in it. But anyway, are you changing your marketing strategy? The person who was giving the free beer, they changed their marketing strategy saying, hey, giving out free milk or a little bit of a discount on the gas wasn't working. But once people started finding out that we're offering free beer, hey, people were lining up to fill up their tanks at our place. So they changed their marketing strategy in order to try to be profitable. Now, you don't have to do something that dramatic, but are you changing different things in order to try to continue to increase your profitability? If you are, then you're treating it like a business. If not, then it looks more like a hobby. Are you carrying on the activity as though it is a business? So are you maintaining records? Do you keep invoices? Things that they would expect to see within a business. So if you treat it like a business, so you're doing good bookkeeping and all your records are there, you have a separate account for your business account and you have a separate account for your personal accounts, that looks like a business. Then the IRS is going to say, yeah, it's being treated like a business. We can see how it's a business. If not, yeah, it's just a hobby. You're throwing everything in one big pot. And finally, do the taxpayers and their advisors have the knowledge or need to carry out the business? Now, you may not have the knowledge immediately, but are you doing things to pick up that knowledge? Are you going to, trade shows maybe? Are you going to continuing education? What are you doing in order to learn more and to become better in your craft? Because if you're trying to develop in your craft, then you're trying to get those skills necessary to become successful, and that looks more like a business. So like I said before, this is a balancing test. The IRS will look at it case-by-case scenario, but the profit motive is by far the most important element that they're looking at. It's the most important factor when they're making this determination. I hope this video helped you as you start to consider what the different factors are and how it impacts the tax, what the tax treatment will be. If this video helped you, please consider subscribing to my channel and look for more tax updates.